Hello everyone, welcome to the Ichimoku.co daily stock market review for the trading day ending Thursday, December 10th. Firstly to the S&P 500, and here we see the downtrend continuing. Today's candle has formed a lower high but a higher low, and suggesting in bar chart terms that this is an inside day. It does raise doubt about the continuation of the trend to the downside. Importantly, however, for the second consecutive day, the market found resistance above the Kijun-sen and just around the Kijun-sen indicator. The rejection today has been quite strong, and we've seen the sellers close with control of the market by closing between the midpoint level and the low. This suggests that the buyers are going to be very, very strong to change their trend back up to the upside, and suggesting that for the next day's trading we could see the market trade back down to the bottom of this highlighted zone 2040. We have, however, seen a switch in the colour of the body of the candle away from black to white, and that suggests that the buyers have found some upside momentum in net terms between the open and the close, as opposed to the sellers for the previous 3 trading days, and that does give us some increased hope that we could see the market test 2 higher levels. But really the benchmark here is going to be the area at the Kijun-sen trading at roughly about 2066, 2067, and then also the Tenkan-sen just above there around 2070. Looking to our band chart, and here we previously saw the market trading down through the lower band, and now we've seen the market rally back to within the bands, finding resistance very close towards the middle of the bands, mean reverting once again, and then finding support just below the lower band and closing back within the bands. It suggests that the market isn't ready to transition into a strong downtrending phase in the medium-term time frame. We do need to watch the market if it does attempt to rally again, watching the middle of the bands at 2071 to potentially hold as resistance. If we see the market breach up through there in a bullish manner, we could end up trading back up to the upper band at 2090, 2092, where we may find some strong resistance. Next to the Haaland Index, and the short-term Haaland Index is suggesting that we certainly could see a rally here and a change of trend to the upside. We've seen the Haaland Index, the short-term one in this first subchart, move higher now for the second consecutive day, and we've moved back to within the bands, suggesting that it's no longer down below that oversold condition, and suggesting a real possibility that we could see the market trade higher. In terms of the medium-term time frame and the longer-term time frame, no activity there yet, but they have flattened out and moved slightly higher, but not back within the bands yet. Importantly, however, those medium-term and the longer-term Haaland Index do take a little bit longer to turn around, and we do tend to get the first move in the short term. The McClellan oscillator. Next to the percentage of stocks that are above their various moving averages, and firstly to the 5-day moving average, and the percentage of stocks above the 5-day moving average has moved higher to 22%. It is in an overall oversold region, and with this sentiment indicator forming a trough down in an oversold region, it does suggest that there is a very real possibility of the market moving to higher levels. Also, we've seen the percentage of stocks above their 20-day moving average move higher from an oversold level, moving up to 32%, whilst the 50-day moving average, the percentage of stocks above the 50-day moving average, has continued to move lower. A bit of lag there, as one would expect, as we've seen with the 200-day moving average. But the indications are here that there is potential for the market to change trend to the upside. Indicators, and the percentage of stocks above the Tenkan-sen has risen to 25%. It is still suggesting that there is some short-term bearishness, but giving us hope that we could see buyers returning back into the market. The percentage of stocks above the Kijun-sen has risen to 32%, and the percentage of stocks above the cloud has also risen to 25%. next to the Dow 30 index, and here we see a very similar type of trading activity that we've seen with the S&P, with a white body candle forming, suggesting a shift in net momentum away from sellers to buyers, so giving us some hope that we could see a change of trend to the upside. Importantly, price action being rejected from below 17,536, but resistance holding at the Tenkan-sen and Kijun-sen, and the buyers failing to take control. It does raise some doubt about whether the buyers are going to be strong enough to change the trend to the upside. To the Nasdaq 100, and importantly, no change of trend here. We do have a potential bullish harami pattern, and that's where you have a downtrend in place, black body candle, small white body candle, and the body of today's candle is within the body of the previous. No change of trend has occurred yet, and we will be looking for confirmation, but we do need to watch the resistance at 4659, an area that the market was rejected from for today's trading. If we do see strong bullish activity above there, and certainly above the high of this current candle at 4674, then there is a good likelihood of the market trading up to 4696. Also continuing to watch support down at the Kijun-sen indicator at 4611, 4612. To the bands with the Nasdaq 100, and here we see the market continuing to trade within the bands. The previous two candles prior, resistance coming in at the upper band, yesterday's candle support coming in at the lower band. A lot of indecision in this market, and we have now found resistance at the middle of the bands. We're waiting for a breakout in either direction. The bands are pointing sideways, reflecting that we have a congestion area going on and a directionless market in the medium term time frame. To the Russell 2000, and following the strong selling over the last week or so, the market had previously breached just down through the 1147 level of support, and today we've closed just back up above there. We are still trading within the Ichimoku cloud, signifying that we don't have any clear direction in the longer term time frame. We've lost that positive trend in the longer term time frame by trading within the Ichimoku cloud, which suggests we have a neutral market in the long term bias. In terms of the breakout above the top of the cloud, the market did test above there and was rejected from there, so holding as resistance, and that's an area that we do need to watch for tomorrow. 1152 is where the top of the cloud is. By the same token, if we see selling, watching the bottom of the cloud at 1137. And just looking at the band chart with the Russell 2000, and this is a very different story than we've seen with the other markets, where we have been trading down below the lower band. It suggested a possibility of a new strong medium-term timeframe trend developing, but we haven't seen the follow-through that we like after that bearish close down below, and we've seen the market rally to the lower band and find resistance there. This still does suggest that we could see the market trade lower, but we do also need to watch this swing low, and I'd like to see strong bearish activity down below the swing low at roughly about 1141 to confirm a very strong negative tone to a medium-term bear market in a bullish manner above $31. McDonald's MCD continues to be a strong performer, a solid white body candle with the buyers closing with control, suggesting that this is one of the stronger stocks in the overall equities market. Relative strength is above 100%, as is its momentum, and they're both pointing out quite sharply. We are also trading up above the upper band and suggesting that we have a very strong bullish tone to this second time frame medium term